Welcome to Shareholders of a Better World, brought to you by TBLI Group. At TBLI Group, we have an established reputation as an organization dedicated to building the ecosystem of global sustainability and impact investing. We're doing this through educating, advising, and facilitating transactions in global sustainability and impact business, as well as capital solutions for private companies, family offices, and fund groups. For nearly 25 years, TBLI Group has created a vertically integrated ecosystem of education to action through TBLI conferences and TBLI consulting. More about our company can be found at tbligroup.com. This webinar is brought to you by TBLI Foundation, which hosts educational learning experiences dedicated to a better planet. Through the foundation, we build sustainable communities by sharing the people and the experiences making a difference to so many of our lives around the world. Our weekly podcasts bring impact thought leaders that are doing and not only chatting. Now let me introduce my Good afternoon from our studio in Amsterdam. Before I introduce Ludo Pyis, some instructions for those of you who've never joined before. If you have a question or a comment, just type it in the lower right or left-hand corner. You'll see comments or questions. There are 3 emojis that you can press if you want to clap or find something funny or brilliant. If you need to send a private message to anyone, just move your cursor or your mouse over their name and a window will pop up and you can send them a private message. And if you have a burning issue and want to join the panel, just press the microphone next to your name and I will get instructions, and hopefully no used car salesman. So I'm really thrilled today because we have Ludo Pyis from Areopa, who is one of the few management consultants I know that actually cares about delivering something in a time. And he found what I feel is the holy grail of actually putting a value on sustainability and IP and getting it monetized and being able to borrow against it and creating a vehicle for that, which seemed, wow, everybody seems to be chasing that down. So Ludo, for those of the audience that are not familiar with you or your work, please give some background, some color, your journey, which kind of led you to where you are now, and what have you been able to resolve, and some of the exciting things that you've been telling me of developments.
All right, with pleasure. Hi, everybody. I hope you will enjoy this little speech. So my journey actually started in 1987. At that time, I left Hewlett-Packard. I was in HP, responsible for organizational development on a worldwide basis. And I left HP, and then I created my own company, which was called the Areopa Group. In the beginning, we were focused on the implementation of large change management projects for multinationals. And why were we so successful in that? We did more than 400 of them in 10 years' time. Was that I always said, if you talk about models and methodologies and tools to managers, actually they don't listen to you. Well, they are interested because but sometimes they can put that then on their CV and stuff. But at the end of the day, after 2 weeks, they forgot already. And then they are focused again on the normal business they do every day. It's more revenue, less costs, and looking for more expansion. And right they are. I mean, we always think that they should listen to us and that they then do what we say. And that is, of course, not true. So we did that first, and and I will not go too much detail about change management, but we also did there the exercises that we didn't start with big models and methodologies, but we start with the calculation of the cost of poor performance, meaning how much money do you waste on not having your business processes timely, accurate, productive, and efficient? Very simple. I tell you, 60% of the operational costs are waste at that time. And that resonates if you talk to a CFO of a company, and then that are your best friends, of course, you can imagine. Anyway, we did that. And then in 1997, there was a new thing that happened to us. I have an organization in which I believed that we should use the things we preach. And one of those things is that that all the managers that I'm sure, they always say, my biggest asset are my people. And then you look at the balance sheet, and they are not there as assets, they are there as costs. You say, isn't that strange? Yeah. So one of them must be lying, either the accountants or the managers, maybe both. We know, who knows? But we said, if we do all this, then we need to understand really how you can measure this kind of things, because it's all about measuring. So when I went then in 1997, I was invited by a banker who wanted to use us as an example of a knowledge company. We were at that time around 200 people. That was 1997. And that was the .com era. And they were looking for .com candidates. And then on that moment, what I did, they wanted to have us going to do an IPO on the stock exchange in London. Now, I told them that was impossible because our organization structure were business processes. And what I always preached to the people, your people are your most important assets. We put that into reality, meaning we don't have external investors. We have an horizontal organizations based on 7 processes. And the investors of our company are all the people working for us. We are today with 650 people. That, of course, is an interesting thing for us. But for the guys from the bank, I can tell you, they thought that I came from another planet when I told them that. They said, that's impossible, that's not it, and so on. And then give me your return on investment calculation, and so on. And then I said, wait a second, we don't do that. We take our revenue and we share it with everybody each time we have an income. We don't need to give it to profit, to I don't know what. We do that with our own people. So the guys, they looked at me and they say, poor guy, what are you talking about? So what I did at the end, I said to them, well, listen, you think that I come from another planet, but I think that you guys are still in Jurassic Park when you talk about the knowledge economy. And I was proven right afterwards because the .com bubble was exploded. And why was that? I said it also to the bankers, and I said, guys, you have one thing that you don't understand very well. You're using old-fashioned techniques to measure new companies. They forgot that now today, 87% of our economy is knowledge company. But all the accounting things that were invented, they were built on manufacturing companies. So classical accounting is actually basic goods in a warehouse, machine parks, and basic goods and finished goods in a warehouse again. But in a knowledge company, you don't have that. Imagine they would do that. Basic goods in a warehouse of knowledge, which is in the heads of the people, and they have to chop off the heads and put them in a warehouse. That, of course, is not of these ages anymore. So in that sense, I challenged them and I said, you guys are wrong. And you are using the wrong techniques to measure the wrong things. And especially, I explained them also that in a company, a knowledge company, because they always ask, give me the balance sheets of the last 3 years, right? And many knowledge companies don't even exist 3 years. How can they give balance sheets of last 3 years? And I told them, but think a bit. What is important for a knowledge company? The present and the future, or that you talk about the past? And then most of those guys, they say the past, and they say wrong. Because if what you did in the past as a knowledge company is today maybe obsolete. It's only the present and the future that counts. They didn't understand me. They said, what a crazy guy is this? Now, what I did is when I came back in the organization with us, I said, well, guys, we are going to invent a way to measure all intangible assets of an organization. And not only from multinationals, but from SMEs, from the smallest one, we call that S1s, that are inventors who are alone even, till multinationals. And we are going to measure all the intangible assets because big companies, they talk about intellectual property, patents and stuff like that. And then I say, but the patent is not an asset, because it could be an asset if you create a revenue stream out of it. But in many cases, a patent is not even used to create products out of it. So it's only a ticket to sue. And that's not really the same as an asset. So what I did is I said, we have to invent a way to measure all the intangible assets of an organization in a monetary value. Because, as I said, if you don't talk money, nobody listens to you. So what I then did, I had a team and I said, hey guys, we are going to invent this. Now, that is, of course, a big, how would I say, challenge in my country house where I am now. Where you normally have only 3 sleeping bedrooms. We were with 30 people, for a full week inventing this kind of stuff. And we came with a concept that says, well, if you have a company, what is then important? Well, each time you do something, you try to add value to your organization. And what is that? That means that, for example, if you recruit a person, then you add value. If you have a new customer, you try to add value. If you have a new partner, you try to add value, a new organization structure. And if you go on, we identified 77 of what we call the added value creating phenomena. And from each of those phenomena, you can then deduct that, or create, actually, better said, the variables and the parameters that they encompass. Let me give an example. If you recruit a person, you don't recruit the person. You recruit his networks, his experience, his skills, his intelligence, his headhuntability, environmental support, and what have you, his motivation, and so on. Now, all those elements, they have an impact on the performance of somebody. Now, in that sense, you can put those elements into an econometric formula. The definition of econometrics is a social phenomena that you can put in mathematical formula. So we did that for 77 added value creating phenomena. So it made us 940 variables and parameters, and then we put them in the 77 econometrics. And in each of them, we put a financial element. So that means I recruit a person, I calculate the value, 100,000 euro, but that is tacit. And what is now tacit and explicit? Well, tacit means that the guy I recruited, I don't own him. Slavery is not of this world anymore. So in that sense, I borrow actually his knowledge. So if he goes away, I lose the knowledge again. So in that sense, we say it is tacit. It doesn't belong to the company. It only belongs to the individual. Now, that's a nice hypothesis. No, it's not an hypothesis. It's the reality. But what you can do is you say, but if I can capture, store, and make reusable the knowledge of that person, then it also belongs to the company. For example, I go and capture, store, and make reusable the knowledge of the person that I recruited. Perfectly possible, right? Now, and each time we can add, remember, that financial element to it. So if you do that, you have 77 of this kind of added value creating phenomena. You have an output that is tacit, explicit. Parts are explicit, that is owned by the company. And we gathered that in 4 different categories that we say you have human capital, that is knowledge. You have customer capital. Your customers give you also knowledge. You have partner and alliance capital. They also give you knowledge. And the structural capital is the one that you capture, stored, and made reusable, and that belongs to the company. So you have present, future, tacit, and explicit. Great, eh? If you do that, we were so happy we could calculate the value of companies, the intangible assets in a monetary value, in tacit and explicit, present and future. But then I did a test case with my dear company that I worked for, Hewlett Packard in Holland, and I said, can I come and do a test case here? Sure. They had consultants, 600 ICT consultants, and we did a calculation. Now, you know that the Dutch people are pretty outspoken if they don't like stuff. So we went there and we had
rude.
And so we calculated all those formulas and we presented them on a slide deck. Now, all those people, after 5 minutes, they said, hey, stop, Ludo. What is this? We don't understand the word. Yeah, who understands econometrics? So that is, they said, yeah, it feels like you guys are explaining us the algorithms of the ignition of an engine of a car that we want to buy, and we want to choose the color of the car and the internal design of the car, but we are not so interested in the algorithms of the ignition. And we said, oh yeah, you're right. Come back, they say, if you can report it in a decent way. Now we said, okay, what we're going to do? All right, now let's put it on the balance sheet. But if you take the classical balance sheets, they are all costs. Yeah, and we are talking here about asset value. So what we said, yeah, doesn't work. We might have gone to goodwill, but goodwill, the Tobin skew, it's the difference between market value and book value. And market value is not in line with the EIS 38 standards, that the one from the auditors, the intellectual capital accounting, or the accounting, or the knowledge asset, actually. Intellectual capital assets is defined in the EIS 38. And it says that it should be identifiable, controllable, and should have future economical benefit. Now, if you go back to the goodwill, if you have what the fool wants to pay for it as market value, that's not identifiable, not controllable, and has probably not future economical benefit. So in that sense, we said, no, we know what the real goodwill should be. That is the present explicit value of a company. But on the other hand, we said we don't want to fight that battle, because then you have to do two things. You have to convince people to use goodwill, and you have to make them understand that it is intellectual capital-wise driven and not anymore in what they had with the residue of a deal that they made in takeover of goodwill or whatever. So we decided to make a complete new accounting system. And so from scratch, an intellectual capital accounting that was consolidatable even with the classical accounting. And why could that be? Well, it is also true, if you want to recruit a person, you need to make costs. And a part of the costs there that you have in your classical accounting could be related to the intellectual capital creation or the intellectual asset creation that we were doing. So in that sense, we could consolidate it, and we could report it even in a consolidated format, by which you suddenly, as an SME manager, could see what the real value was of your company, right? And then everybody in money, in present and future. And you say, wow, yeah, isn't that beautiful? Yeah, then we also had another problem, that were the auditors. Will the auditors accept this? Of course, they had the definition already from the ES 38, International Accounting Standard number 38, which was actually based on activating costs and not on calculating value of assets. So we went to the EIS board in 2004, and we said to them, listen, we have here another technique of calculating the value of companies, knowledge companies, as from today. And they looked at it and they said, yeah, do you have a document for that? Yeah, we had. And we gave it, and they said, yeah, we will now circulate it over the total world, everywhere, where people could then check what we did, and they could ask questions. And I can tell you, it took us 4 years with 4 people full-time with us to answer all the questions from all the professors of accounting, associations of accounting, associations of auditors, and what have you. It took us 4 years, but at the end, they finally accepted it. And they put it beside the classical activating cost system that they still use for manufacturing companies, and there it is pretty useful. And then they added our stuff also. And how happy we were, incredible. We could measure it, we could account, and the auditors have to accept it with their own Bible. And then we went to the companies, and nobody was interested. Because who wants another accounting system? Everybody said, we have already an accounting system, we don't like it. And now you come and sell us another one. Go away. I said, oh la la, we have a problem. So then we said, we need to do something. We need to how can we bring it to the minds of the people? So we first identified 104 application areas. What are application areas? Well, for example, transfer pricing, the fight or the definition or the calculation for knowledge value in transfer pricing, very essential. Guarantees for banks, SME, M&A in intervention or projects. Call it return on investment calculation of budget spendings and what have you. We had 104 application areas. We did with the money from the European Commission more than 400 companies for each of the 104 that we had together with universities. We didn't do that all, but we had a big amount of data. And then with the data, we said, yeah, what we're going to do now, we can also prove now the companies, because with white papers that we wrote, that it is useful to use intellectual capital, but still nobody interested. So we said, yeah, we have to make it much simpler. And right they were, because implementing an accounting system with 920 measure systems that they have to implement and report on a quarterly basis at least. Yeah, and you are a company of 20 people, who would ever do that? So we said, but what if we are going to categorize companies in what we call the S categorization, which is a combination of the evolution of companies and the size of companies based on tacit and explicit knowledge, and on crises in organization development, not on amounts of people, but on crises. And those crises are very simple to know. It's, for example, if you have a startup, one, two people creating code for a new application they want to invent. They don't think on writing anything down, right? It's all tacit, 100%. Yeah, and they amuse themselves. If you are a financier for that, my goodness, what a big risk. We always try to put those people in an innovation center and then give them grants rather than investments. Then what we did is, if you go further, you have then the company of 20 people, right? That's a boss with 19 people, right? If he doesn't change in a normal structure, yeah, he cannot grow anymore. Then he goes to 150 people, then to 500, to 3,000, then multinationals. And with the knowledge that we had from all the cases that we did, we could make a statistical simulation from each of the company sizes, intellectual capital, present and future. That's an estimation. That's not a calculation. It's an estimation. And then we made, based on the questionnaire, the questions of the 920 variables, and that we could have interviewers who are interviewing the company key knowledge carriers there, that are very important people in an organization, that are the people who has all the knowledge for the development of the products, the marketing activities, the sales, and what have you. Yeah, and that is most of the time all tacit. Yeah, work center people are easy replaceable individuals, but the key knowledge carriers, that's pretty essential. So if you talk to all those people, it's not so difficult to collect all the information. So we could make on a slider line the tacit, explicit, present, future, and we could then, based on the statistics we had, give them a beautiful report within a week time on the value of their company, tacit, explicit, present, future. We did that. And of course, now, if I put myself in the standpoint of an investor, yeah, then it's all nice that you know what they are worth now, but what about the future, right? Everything that you call a plan, yeah, everything that you want to do, yeah, that is something want to do, yeah, that are the things that that is future value. But the point is that in many cases, the C-level people of companies, especially of SMEs, they dream, yeah, they want to do a lot, yeah, but if you then talk to the people in the organization, they say, yeah, we know that already for a long time. They always say that, but we don't have the people, we don't have the knowledge, we don't have the machines, we don't have nothing to realize that. Now, if you are an investor and you hear that, then you should run away, because you say, I'm investing in a company that is talking a lot, but doing not much. And if you would see that, you know, that venture capitalists, they have a failure rating between 5 and 8 of the companies they invest in, And if you would do the analysis, then you will see that in many cases that is the cause why they fail. Anyway, so what we then did is that we had that, we called that innovation due diligence. And if we have those two things, the high-level estimation and innovation due diligence, then we suddenly could go to companies and they were listening to it. And in many cases, those companies were then interested in saying, but can't we use it for looking for money, investors, banks? And we said, yeah. But the banks that, everybody here knows that if you are an SME, a knowledge company, and you go to a bank and you say, Mr. Banker, can I have a loan? Then the banker will say, sure. What is your house? Yeah. And what's the value of your house and your car and your wife or husband or your cat and dog? And can I take that as a collateral? And then he maybe gives you 50% of the value. And then I said, well, that's not fair. And there are quite a lot of governments who do 50%. They give 50% guarantees to the banks if SMEs want to have a loan, assuming that the banks do due diligences. But we work together with the European Investment Fund, and don't tell it too quickly to other people, but we knew that every year the European Investment Fund was losing €500 million on non-performing loans. And how was that? Well, we checked it, and what happened is that the companies, they didn't get the guarantee. The European Investment Fund gave the guarantee to the banks. Now, what does the bank do with that guarantee? They put it on their balance sheet. They go to the national bank, and depending on their status, the A ratings, they can triple it, multiply it with 10, and they can have Mickey Mouse money, like I call it, to give other loans. And they don't even care about the SME. And we always said, no, we should not do that. We should care about the SME. And what we have to do is to take it out of the hands of people who are not knowledgeable enough to understand what an SME is. Everybody's afraid of deep techs, biotechs, medtechs, and what have you. Yeah, they say, that is difficult language. But that's not what we have to look at. We have to look at how do they deal with the knowledge? And does the knowledge create products, from which we can create multiple money streams? Well, that are then the things that we said, you know what? We are going to give a solution to them. And the solution is actually based on a concept that we first say, we are going to do an high-level estimation innovation due diligence from the companies who are interested in getting a debt financing. And then we are going, and if they meet the threshold, then we give the bank a guarantee for a full 100%, right? And that is covered by us via an insurance policy or a bond certificate, right, that we put on the stock exchanges. And on that moment, we can finance the companies ourselves, either with money from the stock exchange, either with money from the banks. And the banker is suddenly interested because he doesn't need to understand the company, doesn't need to understand what intellectual capital is. He only has to go and look at the guarantee. Oh, is this a good guarantee? If yes, then he says, who cares? I can do that. The other guys will pay anyway. And we guarantee that we pay in case of failure within the 12 days. Now, that's a dream for a banker. They don't need to think. So we thought for them. Now, of course, everybody says, but are you crazy? How can you manage that you will not fail? Well, we actually put a knowledge manager inside in the organization. And what's a knowledge manager inside? Well, we came up with what we call the 10-step implementation methodology, which is the high-level estimation, innovation, due diligence. Then we teach the organization to turn tacit into explicit, create multiple money streams from each intangible assets. Let me give example what that means. Most of the ICT companies that I know, they always sell that as a SaaS model, right? The services they have. But what about a license? What about a joint venture? What about an SPV? Selling the same knowledge for more expensive prices. we teach them to do from each asset, intellectual capital asset they have, create multiple money streams. Once that is done, then we can see safeguard it, protect it if needed. Then we start to implement an intellectual capital accounting system and make the audits. Now, of course, I don't believe in training, because if you train management, they forget it after 2 weeks. Yeah, they say, "Oh, nice, interesting," and after 2 weeks they forgot. Of course, because they have to deal with their business, and their business is more revenue, less costs, managing their people. And then we thought we should not do that. We should not go and sit in boards and in management teams and whatsoever, because all the information is always delayed there. But what if we put the knowledge manager, our person that we train, in that organization, and he or she executes those 10 steps on their behalf? And that's the Holy Grail. That's the Holy Grail, because normally nobody looks at how SMEs work. For us, that is key, right? And in that sense, we are sure we made it, we proved it. The first time we ever did it, the test cases were 400 companies in Europe, SMEs, of course. And over 3 years' time, none of them failed. All of them paid back their loans perfectly. No stress, no problems. Everything was done. Yeah, and then everybody says that's impossible. Well, yeah, if you think it's impossible, we see the facts. All right. So we did that. And then we suddenly were able to give the SMEs again access to debt financing. Because in many cases, the SMEs, the only way that they could get money out of the markets was venture capitalists, like vulture capitalists in many cases, who don't understand. That's another interesting measure that we once did. How long does it take if a financier is listening to the pitch of a C-level guys of an SME, right? Yeah, they explain the future, and we are going to, and that, and that. They use very difficult words, molecule left and molecule right, and what have you. 12 minutes after they started, the financier doesn't understand anymore what they talk about. And at the end, they then look at them and they say, well, yeah, they have a good team. Yes, there is spirit in that team, right? And they have a lineup with customers that, no, not too bad. You know what? Let's give them $1 million, take 80% of their shares, and then we will see what happens. Well, we can tell you what happens. 80% of them fail, and the company is losing all these shares. And what the venture capitalists do for saving their risks, they sell already half of the shares they have to another fund, to name spread it, with profit, of course. And who is then winning money? That are the venture capitalists and not the SMEs. Anyway, because they needed 5 million and not 1 million. Now, then we said, well, that is not correct neither. All the investments that they do, first of all, we have to teach the SMEs what they should finance with debt and what they should finance with equity. For example, debt. If you have a computer, you buy a computer, you don't buy a computer with equity money, because at exit you pay that computer 100 times back. No, you should do that with debt. And we make lists of everything like that. And then we say everything that you do, added value creating phenomena, remember the cost for that you can finance with equity. Now, we went to the equity funds, but there is a movement in the equity world that I never understood. And what we did, we infiltrated that world. Rather than teaching them what to do, no. I became a partner of an equity fund. And then I could look inside how they really think. And that are very interesting lessons. And then on that moment, we found out that they categorize actually their targets. We are going for medtech, deep tech, that kind of things. And then they recruit a specialist. But that specialist, he can never understand everything that all those companies invent. But it gives a kind of a safety feeling for the equity funds. We have done different compartments, and we can tell that to our investors that it is all good. And we said, no, we are not going to do that. And of course, What most of the SMEs then do is that they get financed in stages, Series A, Series B, Series D, and that kind of crap. Now, each time that you do that, a company is losing value for their own, and they create the value. So what we did is we said, no, we are going to redefine the investment strategies of equity funds and venture capitalists, and we make them finance for life. So that means we step in a company and we finance them with equity and with debt, of course. Yeah, we put the knowledge manager inside, don't forget. Yeah, and then we stay until they don't need us anymore. And on that moment, the classical investor sells his shares to another fund or do an IPO. And I say, yeah, but what about the value that then the owners are losing? And what we then do with our funds that we work with, we calculate the explicit present value. We turn that into a loan, in the bank, that is paid back by the owners, and we give them the shares back. Now, in that moment, they can afterwards do whatever they want with it. They can sell their organization to a larger organization or an IPO or what have you. So that is then what we think ethical approach of working with money. Of course, we use the equity funds and the venture capitalists because, they have the money, we have the models, and we have the measure systems, right? And what we then do is that we try to change their way of investing. And then, of course, we were confronted with the story, but we don't want to be the first. Who did it before us? And we were sick and tired of that question. And what we did is we created our own investment fund. Actually, we have 3 that we work with intensively. And we are part in there. We have a share in it. One in Dubai, one in Luxembourg, and one in the UK. And we use them as demo equity funds. So the other ones cannot say that they would be the first. We have already 3. You say, you see, it works, right? And that is what we are dealing with today. And that is on a massive scale. That guarantee for loans, we do that per region in the world. We have 25 regions for the moment where we work with banks. We have, for the moment, around 16 equity funds that we are working with. And that's, it goes all well. And the strange thing is that those people are so surprised that suddenly they don't have no failures anymore. And I said, you should not be surprised because now you're measuring the right things. You know where the assets are. You know where your key knowledge carriers are. You know what to do. We do it even on your behalf, so there is no risk for the investors anymore. We report very beautifully to them. And so what is still on our drawing table for the moment is our stock exchange. We are setting up a stock exchange where only companies who are measuring and managing their intangible assets could be listed. That is a huge thing. It probably will be a stock exchange in Germany to start with. It is a challenge and it costs a lot of money and effort to do that. But that is for the next time because we are still on the drawing table and legal stuff and what have you. There is more legal stuff than the real work on the organization. So, voilà, that is a little bit my story of my life. By the way, I didn't invent all this myself. We have a product development center in Barcelona with 20 people. We are doing that in teams. I'm not a believer in I am the big man. I am the believer in working with all my colleagues and use all their knowledge and intangible assets. Remember, I started the story with the most important assets are the people. I'm using them. And that is what I wanted to say. Well, Robert, that's my introduction.
Ludo, that was brilliant. So either everybody fell asleep because no one asked any questions. I had a couple of questions. So you've developed a methodology to put a value on an IP for an SME, and also for around sustainability, and some are accepting and validating. So with your document, can anybody go to any bank and get money?
Yeah, well, no. You cannot go to any bank. You will go to the banks that we suggest.
Okay.
Because otherwise, if you go to a bank who is not aware of all this, then you have to go through the total procedure of explaining what the guarantee stuff is and how that would work. And we are constantly enlarging that, because we are now also dealing with Lockton, which is the biggest broker in the world,
Yeah.
insurance broker, and we are working together with the system that they say, yeah, the biggest banks have already an insurance for loans that they give, right? And we go to them now with another narrative, because we cannot go and say you will not fail if you give the loan. What we're saying is we can reduce your risks. So you need to pay less insurance money, and the
Mm.
insurer is more interested because he doesn't need to pay failures, right? And they can take a market, because the way that that banks are not allowed to give a lot of loans, I mean, to have failures by not performing loans. So what do? They only give loans to people who don't need it, right? Or they don't give loans, right? That's their strategy. But in reality, if you would see that, then their non-performing loan rate is still pretty high, especially if we go to Latin America, the US, Canada, and stuff. It is amazing. In Europe, we have the tendency to hide it all, but and I say that doesn't mean anything. So in that sense, we have different approaches, and we always suggest that people first talk to us, and no, if they work with us to do the calculations and the estimations and whatever, automatically we will bring them to the banks where they can go to. So
Okay.
that is the way
I'm
to
getting
do it.
quite a few questions. So I want to take one particularly William has related to the title. The original statement, the original statement for the talk, and we learned how to value intellectual capital. What can I do today to value my company's intellectual capital? And any how-to steps each participant here can apply to their own situation.
Mm. Well, yeah, the short answer on that is start with an eye level estimation. Yeah, and in that eye level estimation, we will make an estimation of your intangible assets, present, future, tacit, explicit. And it looks like a beautiful report with even advice in it how you can increase your value. Now, the good news is that if we only do that on this moment, then the value of your company, if you compare it with the classical accounting what your accountant would calculate, which is in many cases, yeah, what's on the balance sheets, that's it. That is the balance value. Yeah. We can calculate. We will have a result that is at least 10 times more than your actual value. Now, we have to be careful. That's the good news. The bad news could be that you have a lot of tacit in it and that it's not explicit, right? And that is then in accounting world something that they jump on it. Then that's the reason that we always say, if you want to increase your value, first make an assessment like we do, then work on it, right? And then when you're ready, then you can go, and then we will help you. Then we can go to equity funds, we can go to banks with you, we can find for example, we have a company where we about multiple money stream creation. I have two examples. It was a company in Ireland, and they were making a software to control business processes in retail activities. To understand very well what they did is if you go to a mall or to a shopping center or something like that, or to a supermarket, and you put your trolley full of stuff and you go out, there is a cashier. Well, with their systems, you don't need a cashier anymore. Automatically, everything is paid. Now, that is one of the parts. They do it on entry, they do it on throughput, they do it at output. And their biggest, or the companies they were working for, were the 10 biggest real estate organizations in the States. Yeah, Walmart, Kruger, Tesco, those kinds. And they sold their stuff that they made. They had a TTO in Timisoara, and they made very good stuff, but they sold their stuff on based on a SaaS model per shop. Now, if you are Walmart, if you have Walmart as a customer, yeah, they have 360,000 shops, yeah, and they sold it on 25,000 euro each. Yeah, of course they were very happy, but what they didn't took into account is that Walmart themselves have also a development center implementing this kind of things. So they were in constant conflict that they said, yeah, what you deliver us guys is not good enough. We need more. And he had always, and the CEO had always problems with Walmart in particular. On the other hand, there was Kruger. They didn't even have an IT system. Yeah, so that was the reality when I said to them, but if you want to create multiple, they did the exercise of high level estimation, innovation, due diligence, and stuff. And then I said to them, but why are we not going to put that in multiple money streams? And I suggested them that we would set up a special purpose vehicle per customer. So one for Walmart, one for Kruger, one for Tesco. And that we put from the TTO in Romania, in Timisoara, some people who were experts in what they needed, right? And we would then sell 51% of the shares of the SPVs to those companies. And of course, the SPVs need to have a license with the TTO in Timisoara for existing knowledge and for future knowledge. And of course, if we deliver there the researchers in that SPV, then they had to pay also those salaries and the cost of those guys. Now, to cut a long story short, we sold the 51% for $100 million, right? And everybody says, you're crazy. Yeah, but each of them paid it, right? And we sold the licenses for existing costs, for existing knowledge for between 12 and 25 million euros a year. And for new development that varies between 5 and 11 million a year. And suddenly that company had $800 million on their account without doing anything. I always try to tell people, when you need money, yeah, if you go to a bank or to an equity fund, you have to give the money back. But the money that you get from a customer, you never need to give back, right? 800 million. And what did they do? 10 SPVs. That's all. Yeah. That's multiple money stream creation. And the knowledge didn't change. It was always the same knowledge, right? And that is what I say, that are beautiful cases. Yeah, I have another one. That's a biotech company. They made stem cells. And they said, yeah, we cannot sell our stem cells for more than 1,600 euro a set. And I said, well, that's simple. You know what we're going to do? We are going to set up a supply chain model. A supply chain model, they said, what is that? Well, I said, well, the companies that you sell to and the companies you buy from on level 1, we make a list. And then they sell to others. For example, if you sell the stem cells to a company who is making skin for people who have burned injuries, or they make new little organs to test medicines, they sell their product to others. Now, what we then did is we say we are now going to choose in the S plus 1 plus 2 and S minus 1 and minus 2, we are going to choose companies which we are going to invest in. So we didn't invest in the company itself. We invested in their customers and their suppliers. And if you then do that, you have suddenly a kind of a virtual innovation center in which you can define new products. You don't need to go and sell anymore. It's obvious that you sell. You can create new product deliveries, and they multiplied their revenue by a factor 25. Yeah? Stuff like that. That is what I call multiple money streams. But you need to have your intangible assets because it's all based on knowledge. Otherwise, people don't do that. You're not going to be an S1 in the supply chain and say because we have the same investor, suddenly they increase their prices. That doesn't work. you need to go for other money streams. Yeah, and that is examples. I have tens of them like that. But that the one from Everseen is that's a very interesting one. That's the best one we ever did. Yeah, we never did better.
Marianne Silter had a question: how to extend the concept to other immaterial assets? We are putting our heads around natural capital in her case.
Well, we are talking about intangible assets. Knowledge, for example, that's intangible, right? You cannot touch that. It's in the heads of the people, right? And if I talked about key knowledge carriers, remember? And a key knowledge carrier is somebody who has a lot of tacit knowledge. Tacit knowledge means it is not belonging to the company, it's in the heads of the people. And the way to do that is capturing, storing it, and make it reusable. Let me now explain how that works. And I will give a real concrete example. If you go to an R&D department where people are inventing ICT solutions, right? That is intangible, because if you talk to those people, those programmers, they have a very special kind of language. So they talk about stuff, they invent, how can you grab that, right? So we developed a system that is based on videotaping. So we interview the key guys that we say that is the one who has very creative ideas. In tacit knowledge, let me give you the definition of it. It's lessons learned, cases, stories, little methodologies, experience, all this kind of stuff. And then we videotape him, and automatically from the videotaping, we make an ebook. We give that to the person, and we say, that's what you said. And he said, no. And he adapts it, and we videotape it again. And then we give it back again. We vet it, we may give it back and say, is that it? No. And then until he says, yeah, that's it. But by doing that, you structure his knowledge, his thinking. And we don't stop there. On the moment that he says, yes, this is it, then we even go to his peers and challenge the peers to criticize what he was thinking. And again, it changes. And of course, it's an evolution. And if you can put that into practice constantly, then you can always capture knowledge. And you can do that for ICT. You can do that for marketing. You can do that for networks. You can do it for all the intangible assets that you have, right? But you need that's a job to be done, And there we teach or we explain the people how to do it. And if they can't, we can ask our knowledge managers inside to do it for you, right?
John Howell had a question for you. Very articulate deep dive into the details beyond the concept. Much appreciated question. How much education/marketing time do you spend versus actual execution?
Oh, that is pretty fast. Yeah, I mean, because when I tell you the story of my life, actually, that is of course there are so many elements in it. Yeah, if you dig deeper into it, that is a complete other story, of course. But if you want to use it, it takes in a few days. Yeah, it's not so complex on that moment because we will guide you in your thinking. And that is always the problem, that most of the people don't think like that. They think like accountants think. If you dare to say that you come with intangible assets, your accountant in your company will kill you. He doesn't understand that, right? We even have then also KMIs of accountants who are specialized in intellectual capital who can join him. And otherwise, he's afraid that he's going to be put in jail and run cases and that kind of stuff. Yeah? So that are the ways that we do it. We facilitate the thinking, right? And you should not take it. We have to go in further. And for example, we also do that for all the new tendencies, like ESG, like sustainability and that kind of stuff. We always see that ESG and sustainability activities is always, what would they say, measured outside the company. They never measure in the company, right? It could be that the company says, oh, I am a big expert in ESG, right? And the company is crap. But there are companies who are dealing with ESG and they manage their knowledge very carefully to guide, for example, an extra letter in the ESG, the ESGV, we call that, that's the value. And what we did is we created an econometric from ESGV, the V, the value that you can have. Because we may not forget in ESG, it is something that should support your investors. Because we may not forget that investors were the guys who started it. They said, hey, guys, management, yeah, green is important and you have to think about it and whatever. And then those poor guys, management, they said, oy, what should we measure? And they start to measure everything, yeah? How many plastic cups we drink, and you're imagine that you're an ICT company, or they say, what is the size of the roof on which we have an office and stuff? Yeah, that's crazy. Of course, has nothing to do with it. And what we try to do is what we state that we should look at the organizational processes, level 3. And we ask the people who work in those processes to come up with solutions or ideas how they could measure or they could put some environmental elements in their processes. Sometimes they can't, sometimes they could. And then they have to show that by doing it, the process performance will go down, cost saving. And that the things that they do should create added value in the multiple money streams. And then we link it to the creation of intellectual capital, right? And the multiple money stream creation. So we take the total flow, saving of costs, the value identification, and multiple money streams, which is revenue, put it in one econometric, which can be put on the balance sheets. Now, if you do that, and you have an ESGV approach, and you can put beside goodwill on your classical balance sheet, you don't need the intellectual capital one, then you can put it on your balance sheet and it will be accepted by the auditors. But we should stay away from conceptual thinking, right? I hear so many times people discussing. We went to a company in Japan and they were doing ESGV measures. And what they did is they collected from everywhere, everybody was measuring stuff, and they tried to classify that and then work with it, right? And then I looked at it and I say, my goodness, if you have to do that for one company, the company is only doing that and not doing anything else. So we have to streamline that. Yeah, we have to make it simpler. And we have to put it in money. If you don't talk money, nobody listens to you, right? So that is in many cases the crisis of good intended sustainability initiatives, right? You see that them dying because it is only conceptual and it doesn't give you any reducing costs, more values, more revenue streams based on assets that you can put on balance sheets and stuff. You need to do that. Otherwise, no go.
Jacob Hoon wanted to know, how can this community engage with what you are doing? Both how can you help this community and how can we help you?
Okay, Jacob, hi. Well, the community that we have is that what I always dream of in the beginning of such relationships is that we do cases that we can put on the table. I would be more than willing to do that if people want to gather around a case building stories for themselves, right? So that you say, for example, I want to know what my company is worth. Fine, we can talk about it, how to do it. I can even teach you. I can give you the ideas of the tools. Of course, if you want to use that really in detail, then we have to earn some money also. Then we have to go deeper. But the concepts of all that, with pleasure, I want to share much more details than I talked about today. With pleasure, right?
Okay, Meg Brindle had a specific question. I work with the Maasai. It's an African tribe whose brand, an intangible asset, is used by many companies trying to acquire licenses for them. Question is, we've distributed 6,000 smoke-free stoves with carbon emission savings. Translating this into dollars by the UN system of carbon saving. How do we show the Maasai themselves are an intangible asset to companies like Louis Vuitton and car companies who use their name, image without paying licenses? And any thought on carbon emission credit translating to intangible assets? Sorry for the long question. Brilliant work you do.
No, but it's a very interesting question. The point is, we can calculate all the values of this. All the streams, what you just described, we can see then, and then we had it already also in Canada, where we had the native people in Canada. They are also getting a lot of money from the government to survive, actually, to do nothing, as a matter of fact. It's a compensation for what happened in the past. But they want to do something more, right? And then they try always to go and put that into brand values. But brand values can only have a value if there is a customer side or a customer amount of customers who are interested in that. You can say, yeah, Louis Vuitton is also a brand that has a lot of impact. And you can calculate the value of it based on the impact it can have. But that is return calculation. What I always want to do is to calculate the real value, looking for the multiple, and here again, multiple money streams. Yeah, brand is, for me, not always the most important asset that you have. There are many more, right? And the Maasai, I know them also. Yeah, they have much more to offer. Yeah, you can turn that around, meaning rather than selling the brand of them, they can go. For example, I'm now inventing. You can go to movie channels, for example, and go and make documentaries about them and get the payment for it, right? That is also a way of using the brand, because if you don't have the brand, they will never do it, right? So in that sense, you should go a step further than brand value. What you're going to do with the brand? How can you create those multiple money streams? Brand is an asset, yeah, but out of each asset, you have to create multiple money streams, Mike. But again, I would love to go into the details of that, but then I need to know more where you are already, what you do already, and that we could have a deeper dive into it to understand what you did already and what you could do more.
Okay, let's see. Beata wanted to know, what's the smallest company you valued? In other words, do you have a minimum size you work on, 1 to 2 people firm, or is there no limit?
There is no limit, but like I said in the speech, the S1s, we call that S1s, that's the smallest company there is, right? That is one person thinking about a product that when he starts to work on it, then they think that all the world is going to buy their products, right? And that is not always true, of course. So rather than just, we have an approach, and I will tell you in a second how we do that. So that is the company that we also work with, but in another structure. We set up an innovation center. And in an innovation center, we bring those kind of companies together. So that means, in many cases, we also put a special purpose fund even there, that we can fund the people. We also put people in it who look for grants, but we also look for people put people in it who check the markets of the products they are going to sell. And that is in many cases very important, because what we found out, I can tell you, there is, if you take a company who invents new things, they always, let me give an example of a very stupid thing. A guy once came to us and he said, well, I developed a windmill for personal use in your garden. I said, okay. Tell me, how did you do it? How did you make a prototype? Yeah, we made a prototype. Yeah. So, and I said, oh, yeah. And he said, and the world is waiting for this. Eh? And I asked him, why? Well, he said, because my brother told me, right? So, in that sense, you have to go and check that everything that somebody comes up with has really a value. And the second thing is that most of the inventors hate sales. They don't like it. They don't want it, even, right? They will continue working on their product until they die. Yeah, it's never finished. And you have to make sure that you can deviate them from that kind of thinking. And in that innovation center, we have several steps. Yeah. So what we do is we first have, of course, the guys who develop their product. We help them in developing it with grants and specialist advice. But at the same time, we start to set up already sales approaches, which in many cases we keep apart because they hate it. They don't talk the same language. And then in step 2, we try to bring them together. A product market mix, we call it then, yeah, with some sales activities. Because if they don't have revenue, then it doesn't work. Then once we did that, when we go for what we call multiple money stream concepts, like I explained with that company in Cork, yeah, that is then a next step that you can build in, and then you go to M&As. But M&A should not always be where you sell your company or you buy a company. You can do supply chain models, right, by which you become much bigger and much more control. Yeah, we are recently have another biotech company which is called Neurobio, and they have a unique thing in trackers for cancer and Alzheimer and even treatments. They are doing clinical tests and they need money, right? And of course, there are so many people looking at them, and they have success. That means that soon they will have offers from multinationals. Now, that is, of course, in that organization a problem. Some of them, they say, yeah, then we have our pockets full of money. But the founder, she said, no, I'm not so interested in that. I want to stay in control of my development. I'm not finished developing stuff, right? I want to continue. And the risk is if a big company would buy that, yeah, then you die there. Yeah, you are overwhelmed. You take it out of your hands and nothing happened anymore. So what we then do is with the supply chain model, innovation center concepts, managing this. So the short answer on the smallest organization is yes, one person with a good idea and a market we will do in an innovation center. If they grow up to 20, then as from then we leave them alone. Well, let them fly alone and guide them in debt financing, equity financing, growth elements, and what have you.
Jacob wanted to know, great idea, why hasn't this already exploded? What is the biggest hurdle for wider adoption of this approach? I'm sure there's plenty of SMEs that would love the benefits of this.
I
Is
know.
it more of a limitation of banks willing to participate?
Well, we may not forget that we are fighting the financial world. Yeah, the financial world. We also have a division in Areopa where we go and teach in universities, yeah, in accounting, in associations, accounting associations, and what have you, because all those people today still are trained in the old-fashioned way, yeah, classical accounting, and then we come with our stories, yeah, and then people are loving it what we do because they can get money with it and that kind of stuff. But managing the intangible assets is not such a simple thing, right? That's the reason why we put KMIs inside. So it is not so difficult to do that, but we are fighting against the total establishment of the financial world. And that's the reason that it is always a big discussion. Let me give the example of the auditors, right? As you know, we managed to have all the auditors in our grip because we have the EIS 38 that is accepted our methodology, so they have to accept it. But you have to go and look at reality. And An auditor only looks at his Bible, which is the EIS standard, or not only that, there are many standards that they have to know to do audits. When they want to be certified, they have to study it, right? But once they are certified, they never look at it anymore. So if we are then there with a company and saying, "Hey, auditor, please put your stamp on it," then he is always saying, no, intangible assets, no. And then we have to say, wait a second, your own Bible, here, look. Oh, I have to talk to my boss, and you have to sell it each time again. And again, Jacob, that is so much work to convince the people always. We found a solution to that. And the solution is the following. We are setting up a chain of joint ventures with accountants and auditors throughout the world. Not the big ones, level 4, level 5, tier 4, tier 5. Yeah, not the multinationals like the big 4. And we propose them and we say, let's set up a joint venture. We will bring in the knowledge. You give us 2 of your auditors that we train. And each time we will bring you the customers. And each time we bring a customer, we do 50-50 split until the license for us is paid. And then you can keep all the money. Now, in that way, we are creating a worldwide chain of auditors and accountants, who are dealing with intellectual capital. And I can tell you, I wish I could do it in a week. But I can tell you that this takes a lot of effort. And because, I also want to have it immediately rolled out. But before the call, Robert and I, we were talking about some events that happens lately with us. Suddenly we are discovered by means of speaking, right? So, and people approach us, and suddenly we have, scaling up our stuff. And of course, that gives us the challenge of making sure that we have all the experts in the house that to deliver. And we are 650 people, but we need to be thousands of people if we want to do that on a larger scale. And we are doing that because we have our internal recruitment office, we have our own training, we have our own coaching, and people have a very structured initiation of 6 months before they can go to a customer in doing this kind of stuff. But all that takes time. And I don't want to jump. I would be afraid that suddenly we would be overwhelmed by demands and that we cannot deliver anymore. That would be a shame. That would really be a shame. So I prefer in a controlled way, but even though with the deal that we were making now in China, that is not in a simple way. But then we have always the system that we sell licenses to companies who want to take it over from us. And that is then also a multiplicating factor. But you're right. That's the answer on the reason why. And it is also not simple to understand. When I tell it, yes, but to do it, that's, of course, a little bit more detailed and a little bit more problematic. And it is in many cases always so circumstantial, because there is no same company. There are no same companies, because it has to do, if I take a company in Europe, or let's say in Belgium, and I take a company in Southeast Asia, or I take a company in Latin America or in Canada, cultural differences are always there. And they are playing a very important role. But we are discovered by the BDOs of this world, and and it will happen. But maybe I will not live that anymore.
I'm going to take 2 final questions. Glenn, this is a question that we can probably discuss another time. How do we commercialize or monetize TBLI? So Glenn, definitely working on that. And this is first step, but we'll discuss this probably after. I don't want to take up too much time of everyone. Emmanuel wanted to know, how can we apply what you're doing to sustainability and ESG intangibles, moving the ESG from cost to profit on a balance sheet?
Well, you forgot one thing. You have to put assets in between, right? If your ESGV has to identify the assets, let's think, environmental, right, social, and governance. What we did is in our econometric that we have, that you can put on your balance sheet, by the way, that econometric. If you take, for example, that you improve or identify the processes of level 3 of an organization, right? I could send you an example of what that means, processes level 3 in an organization. There are always people working in it from different departments and from different hierarchical levels. But we call them the process owners. And if you take the process owners together around the table and you say, do you know which process you're working in? The answer will be no, they don't. They don't know because they are thinking vertically. Yeah, the salespeople report quota achievement. Admin people should have good audit reports. Yeah, service departments, they need to have high productivity and what have you, right? But if you start to think horizontal, then it is the customer who is driving the processes. Now, if you then do that with those teams and you make them visual what their process is in which they work, takes time to do that. It's not something that happens overnight or that you cannot tell them. For example, it has nothing to do with procedures. Procedures is a predefined description. Yeah. But what you need to have is in this case, is the as is. How do you do it today? Right? If you have a process on that level, and you then give the people the instruction, implement now an environmental dimension in your process work, right? If they don't know it by heart, then we can give them the 500 IDs or measures that Doshisha University in Japan in Kyoto made, right? And then they can think, and either they find the solution or not. But what I always say is that they have at the same time, because they did it, have to reduce their cost of poor performance. More productive, more efficient, less non-accuracy, less non-timeliness, that kind of. So you have already a saving. That's cost saving. Then, of course, if you do that, then the output will be a product at the end of the day. Does it create more revenue that you are using E elements in your organization? It should be, and if it doesn't, you have to look how you're going to sell it. Yeah, because everybody says, yeah, the greenwashing idea is all around, but that means that the companies are not serious, right? They don't even know what they talk about. But if you do that, and then on that moment you create extra money streams based on the assets that you define, and you put that in one econometric formula, that's what we did with the financial element in it, you can put it on your balance sheet. It's not so difficult. It's pretty simple to do, for us, simple to do, to say how it is done. If you have an organization that has defined their business processes already on level 3, but on as-is situations and not procedures, then it is not difficult to do. If that is not done yet, then they have to first do the process analysis. Yeah.
Ludo, you were brilliant, and actually, hardly anyone left. So I'm conscious of your time. I've taken more than I had said.
It's fine, no problem.
So I want to go quickly into a short networking series where people can chat with each other. You're more than welcome to stay if you have something to do. I'll understand that. I just want to take a quick group selfie to show that we were doing some work today. And you can add that to the IP, intellectual capital of sharing knowledge among people. Absolutely brilliant presentation. We will send out the link to the replay shortly. Just wave to the camera and it'll like photo, and then send that as a card with all of the different photos on there. And we'll add information that Ludo wishes to share or how you can reach him to further grow this idea. And I want to thank you, Ludo. You were absolutely brilliant. Thank you also, Sam, our producer, Crypto Genius, and Ramen critic, Ricky, my absolute better half with no filter, Xi Jinping, our head of transparency and integrity, Vladimir Putin, our head of conflict resolution, Jeff Bezos, our human resources and full text compliance leader, Elon Musk, our humility coach, and George Santos, our truth mentor. Thank you all very, very much. If you want to join the mixer, which we will start in a couple seconds, don't do anything. The system will tell you what to do and just to log in again. Ludo, thank you so much. And then
Thank you all. Thank you. I look forward to meet you again. Bye for now. Bye-bye.
Bye-bye. Okay, we'll go right to the mixer now. Okay, and this and here. Start. Enjoy. Well, thank you all for if some of you did come back and stay until the bitter end. Thanks again. I think next week we're taking a break. I'm going for a short holiday with the family. So we won't be doing one on the second or third. We will all TBLI Circle members are invited to a mixer, which you can find the link on tblicircle.com. So it's just a mixer. No need to register. You click on the link Friday, 5 o'clock, and you're connected. No speakers or anything like that. We're trying some new things to consolidate in fewer platforms and provide more services. There's some new things that Circle will be able to do, like starting your own, chat room and same as Twitter and that. So thank you all very, very much. Lisa, Daniela,